Dana here with the reminder that to become a consistently profitable trader, you have to understand how to manage losses because guess what? Losses will come, but they need not take you out or even substantially impact your portfolio if you have rules and you stick to them. So on your screen, you see plug, and I will demonstrate a recent trade, which for me resulted in about a 50% loss on investment for this particular trade, but had a very small impact to my overall portfolio based upon my stop loss rules. So let's walk it through. You see plug on the week aggregation. Each candlestick represents 1 week of price data. The weeks of February 19th and February 26th combined to create this hammer candle, rejecting a support level that I found on the month based upon engulfing candles. I have videos on that. Take a look. So there's my signal. Confirmation would be if price broke above the high of my hammer candle or my signal. My first target would be the high of the candle, which was the week of January 29th. Again, this is based upon the thesis that price tends to retest a previous high. My second target being this gap fill area. This shaded area is where plug created a gap down. You can see it better on the day aggregation. This is the week, but this is the gap. So this would have been the second target. I also have videos on gap fills. Take a look at that. And then I also identified my stop loss. This is a part of my risk management to make sure that no contract ever expires worthless. So based upon my stop loss, which was 50% of my signal, if price were to close below this area, I knew that I would be out of my contracts. So let's see what happened. The week of March the 4th, you see that price on plug moved up and it confirmed my entry. At this point, I bought multiple call contracts. Let's see what happened next. The next week, the week of March 11th, you see that price sold off. Not only did it sell down, but it broke below and closed below my stop loss. So based upon my rules and my risk management, I exited all of my contracts at this point. So let's see what happened next. Price continued to go down, 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 and down. So because I stuck with my rules, I was able to recoup part of my investment without these contracts expiring worthless. So you may ask, Dana, why didn't you just wait to see if price would have turned around? There's no reason to do that. I had a rule. My rule was if price broke and closed below this 50% or this stop loss level, that was my signal to exit. That price was not moving in my favor. And for that very reason, you see that how plug continued to move, it confirmed my thesis. Now, even though I endured a loss on this trade, it does not mean I need to throw out my entire strategy. Absolutely not. I use this strategy all the time. A 2 week reversal off of a confirmation, off of a support level or off of a resistance, if I'm doing a put with confirmation. I recently showed you numerous trades where I've used that same strategy to double or even triple my money. So the point I'm trying to make here is even when a trade goes against you, it doesn't mean you need to necessarily throw out your entire strategy, especially if you have back tested it and you know that that strategy works for you. There's no need to throw it out. The issue is just take a step back and reassess the trade to see if there's any other information you could have learned. So for me, I'll point out that up here where you see my cursor, this is a resistance level that was on the quarter aggregation, again, an engulfing candle. And if you look to the left, you see where price rejected that quarter. This could have been a clue to me that plug would not find support here because it rejected a higher level time frame. So that's one reason. Additional feedback or, just in retrospect, considering this trade, at this area, Plug had its earnings report, and it was not, well, by some traders' estimates, it was not a good earnings report at all. So some may say this would have been a clue that Plug was going to continue to sell off, but I'll be honest with you. The earnings report was not that relevant to me because I depend and really rely on technical analysis. So I think the key again is establishing your rules, establishing your stop loss, and sticking to those. So just remember that trading has risk. Do your due diligence and find a strategy. Back test it and stick to your rules. And bottom line, don't be distracted. A loss is going to come. No fuss, no muss, no big deal. On to the next trade. Questions, let me know. Otherwise, have a great day. We'll talk again soon. Goodbye.